And gold prices are moderately lower this Monday morning as investors await the Fed meeting in Jackson Hole. Joining me now is Frank Holmes. Frank, good to have you back.
It's good to have you back.
So, Frank, just when we thought gold was off to a great run, last week we saw it struggling towards the end of the week, and also this morning trying to hold on to a $1,300 level. How do you see the metal set up this week, Frank?
Well, if I looked at the negative real interest rate model, gold should be around $1,400. So it is languishing. And there's lots of concern of the global GDP growth maintaining itself. And we're going to get some important numbers coming out this week.
Now, Frank, before we speak more about gold, let's look at the PGM story a second here, especially palladium, which climbed to a 13-year high this morning on concern supply will lag demand. Also, rhodium up 45%, Frank, last time I checked, from the start of the year. Are PGMs the real growth story?
Well, rhodium is the warrant on palladium. Long-term warrant, so therefore it's going to have much greater volatility. And I think it's very important in that industrial growth. So if we have maintained this global PMIs rising with the 1 month above the 3 months, then I think the PGMs will remain robust and healthy and strong, and the rhodiums will run even further. But the big metal is palladium. It's in our top 10 holdings when we take a look as a gold asset classes. We think that platinum and palladium are key. Platinum is more emotional with gold. So if gold has a big spike, then platinum goes up not only on demand, industrial demand for it, but there's jewelry demand that comes out of Asia, and there's this emotional attachment that's more highly correlated.
Frank, let's get to our OT segment now. Opportunities and threats in the gold market. Looking at opportunities, now gold may be struggling, but what about the gold mining stocks? Is there an opportunity here?
Well, they've been so beaten up, and when you just look at the data points, in 2007, the gold stocks peaked at almost 25 times cash flow. In December of 2013, they fell to 4 times cash flow. Now they're up to 5.5, 6 times cash flow. The long-term median is around 12 times cash flow. So I think that they have more upside than they have downside.
Now, Frank, let's move on over to threats now. And I thought of you when I saw the recent World Gold Council study, which reports that Chinese gold demand fell 51% in the second quarter year over year. Where's the love trade here, Frank?
Well, there's a couple of things. I think the channel of being able to track gold going from Switzerland going into mainland China has changed. So their process of what they're able to get transparency with has modified itself. So I think that that's important. Just the same thing has happened in India. Being able to track how gold is getting into India is much more challenging than it was 3 years ago. So I think that that's the key factors when we're looking at those differences. Now, please, let's take a look at all the gold being dumped out of the ETF last year was predominantly consumed by China. So China's numbers showed spectacular growth. And I just think it's very difficult to maintain that spectacular growth that we had from the 12-month rolling period.
Now, Frank, what about Europe seeing a trade surplus in June, offering some good news to the Eurozone's struggling economy? Could this be a threat to gold?
Well, I think what's really important is this negative real interest rates. What we saw 10 days ago was German bonds went negative. 2-year bonds went negative. Negative. So what's going on in Germany? What's going on in Europe? And now we saw last week in America, the 10-year government bond yield broke down. And then we saw MLPs and utilities all of a sudden starting to bounce up in this threat of living with a low interest rate environment. So the real concern has been that Yellen's going to pull away the punch bowl from the party, and therefore interest rates are going to spike. I'm of the thesis that it cannot spike very far because there have been so many fiscal regulations and rules that it's difficult for money to flow freely. So governments are going to continue to have to maintain negative real interest rates. That is always good for gold.
And that leads me to gold's touchdown pass of the week, Frank. You mentioned Yellen, and traders and investors will be looking at this week's annual Kansas City Federal Reserve meeting where both Yellen and Draghi are scheduled to speak. Is this the touchdown pass for you, Frank?
Yeah, I think for lots of rhetoric on the media, et cetera, will be. But I think more important is what CPI does. and the CPI going to be, if it's positive, flat at over 2%, and the 10-year government bond fell last week, then I think gold pops on that because of negative real interest rates. As it comes for China, which is, remember, the 800-pound global commodity gorilla for commodity demand, their HSBC flash PMI, which is like a crystal ball looking to the future on commodity demand, it comes out on Wednesday. Then we'll get Chinese PMIs, et cetera, but it's usually a good precursor to market activity.
Frank, as always, thanks so much.
Happy investing.
And thanks for watching Gold Game Film with Frank Holmes. He'll be back next week. In the meantime, email us at newsfeedback@kitco.com. Thanks for watching.